Hey everybody, it's Phil Evans with BayAreaLifestyle.com, and today we are back with Phil Caulfield, and today we're going to be talking about FHA and VA loans. Phil, thanks for being here with us today.
Thanks for having me.
Yeah, we want to talk a little bit about FHA loans. So tell us, we always talk about FHA loans in the acronym, but what does it mean? What is an FHA loan?
Okay, well, FHA stands for Federal Housing Administration.
Okay.
The Federal Housing Administration is the institution that insures the loans that mortgage lenders do against default.
Okay.
So,
how is that different than a normal loan? We call what is it? Conventional and unconventional?
Conventional or government. Yeah.
Okay.
It's different in that the loans are insured by the Federal Housing Administration.
Okay.
Whereas loans that are conventional, those are insured by private mortgage insurance companies if there's a low down payment.
Now, does an FHA loan get sold again as a second, kind of on the back market, the secondary
yes.
market? Is that it still gets sold like that?
They
the
still
government
get sold,
still
yes,
okay.
because they're made by investors, or the loans are made by lenders like us, and we package them together and then sell them in the secondary market, and that eventually winds up on Wall Street as a marketable security.
Okay, all right, that makes sense. So, what's special about an FHA loan? Why would somebody choose to go with that versus a conventional?
Well, the most special thing about an FHA loan is that the down payment only has to be 3.5%, where with most conventional loans you're looking at 5% or more down.
Okay, so that makes it really important for our area because we're such a high-priced area here in the Bay Area. So 3.5% is pretty attainable for more people than, of course, the people that think they need 10 or 15 or 20% down. What are some of the special requirements that people should be prepared for? Because I guess I feel like there's always a catch, right? It's like, yeah, we're only gonna make you do 3.5%, but what are some of these catches?
Well, actually, one of the benefits is that with a lot of the first-time buyer programs, there's income limits, meaning that the borrower's income can't be any more than, depending on the program, 80% or 120% of the median county limit in which the property is located.
Okay.
With FHA, there is no income limit. So if you make $1 million, you can get an FHA loan. It's just the minimum down payment. Now, one of the catches is if you're looking at a condo with an FHA loan, the condo has to be on the approved condo list, which is not as extensive, as large as you would think. So you have to have a condo on the approved list, or else you can't buy it with an FHA loan.
So what are some of those reasons do you think that list doesn't include every condo? Or there are certain costs to developers or something like that with upkeeping that?
Well, there's cost to developers, there's work, the approval expires after a certain amount of time, and for some reason, some homeowners associations just don't get the approval renewed, which makes me wonder, because having an FHA approval makes the property more marketable because more people are able to buy it because of the low down payment requirement.
Yeah, one of the things that's interesting as a real estate agent in the Bay Area is that, of course, money talks, where if you have a huge offer on a home, let's say, for example, let's say a condo is worth $700,000. And, somebody with an FHA loan was going to come in and offer $750,000 or even $800,000 for that, whereas somebody with a conventional loan might offer, say, $730,000 or $740,000. There may be a chance that the conventional loan will get outbid. However, there does seem to be, with real estate agents, a real kind of misunderstanding about the FHA loan, kind of, whether it's going to be backed or not. It's like, well, the guy's only got 3.5% down, so he doesn't have as much skin in the game as the person who with 20% down. So I feel more confident going with the 20% down person instead of the FHA loan. And that's kind of something I've seen with clients of mine as well. They want to use the FHA or VA loan, but they know they're not going to be as competitive. So why Why do you think that is? Is an FHA loan just as likely to be underwritten at the end of the day when they open escrow, or is there really something that we should be aware of as far as FHA loans not maybe being funded as much as a conventional loan?
Yeah, well, one of the issues could be with the appraisal. If the appraisal comes in low, generally the buyer has to make up the difference. But if they're only coming in with 3.5% down, that usually means that they don't have a whole lot of money to make up the difference. So that's one thing that sellers can be skittish about is, is the property going to appraise? The other thing is that there's sometimes more to an FHA loan than there is with a conventional loan in terms of qualifying.
Okay. You mean, so in our other videos that you should go to bayarea-lifestyle.com or YouTube to see, we talked about what some of those criteria are for a conventional loan. Are those criteria different or the same for an FHA loan with different standards as far as your credit score? Talk to us a little bit about what it takes to become eligible to qualify for an FHA loan.
Well, on one hand, there are some benefits to the FHA. Credit scores generally can be lower than on a conventional loan.
Okay.
The general score requirement is about 620 as a middle score for the lowest borrower. Some FHA lenders will actually go down to 580, but those are few and far between. So that is one benefit over conventional. What else? Another benefit of the FHA loan is it can be all gift, the down payment.
Oh, interesting. Okay.
Yeah.
So if a grandparent or a parent wanted to give you that 3.5%, that would be okay.
That's okay.
Yeah.
Yeah.
Now, what are some of the things, since we're talking about gifts, just really quickly, what are some of the things that people need to know about that money coming into their account? Because I know with a conventional loan, especially with my clients that have family members giving them money, especially from overseas, you have to be very careful about, which account the money goes into and how soon and how long it's been in the account. Is it the same with FHA loan gifts, or how does that work?
Yeah. The gift has to be documented with a gift letter. The source has to be tracked, meaning the donor has to show their bank statement where it came from. A copy of the check has to be provided, and the deposit into the new borrower's account has to be documented. What else? You don't want to get cash. Cash does not work.
Okay.
So it should be a check.
A check, so you can kind of have a trail.
Or a wire. Yeah, it's got to be a paper trail.
Got to be a paper trail.
Yep.
Okay. So, one of the biggest advantages of a FHA loan is being able to put down only 3.5%. Can you put down more, or is it not advised because you're only going to get it up to a certain amount anyway, or does that increase it? If I put down 10% for an FHA loan, can I get that number past the 636 up to 700 or something like that? How does that work if you put more of a down payment down?
Well, the larger down payment is fine. You can put as large a down payment as you want, but the maximum loan amount for single family or condo is $636,150.
Okay.
The reason why you put more down and use an FHA loan is what we talked about before. If your credit score is not as high, you can't qualify for a conventional loan, or all your down payment's a gift.
Okay.
So there are reasons to do a larger down payment with an FHA loan.
But the max is going to be,
The max
for
is
our
still
area,
for
is it
San
636,
Mateo,
150?
basically for the Bay Area, 636, 150.
Okay. Now the good news is, if you are buying in the Bay Area, there are still a ton of options at 636 and below. Actually, you can subscribe to my newsletter monthly, and I send out a video that talks about each county's least expensive homes, and that's single family homes, not condos, which are generally less expensive than single family. But I let you know what is the least expensive homes for each county in the Bay Area. So subscribe to that if you'd like to know whether 636, and that's 636,000, just so you know, works for what you're looking for in the Bay Area. But if somebody's going to put more than 3.5% down, would you recommend they just do a conventional loan so that they can qualify for a higher loan amount?
I would, and the reason is because the FHA loan is more expensive than a conventional loan. With an FHA loan, there's a upfront mortgage insurance premium, which is added to the loan amount, and then there is a monthly premium that you pay along with your principal and interest payment. So it's more expensive than a conventional loan. With a conventional loan, if you have a small down payment, you can break the loan up into a first and a second and avoid mortgage insurance on a monthly basis. And you also avoid the upfront mortgage insurance premium that the FHA loan has.
Okay. So talking about PMI or private mortgage insurance, is there a way to get rid of that after, is it 20% generally, you have to pay up to 20, it used to be that you pay up to 20%, and then you didn't have to pay anymore. And then there was a law passed, I think, that said, well, you're going to continue to pay PMI until you refinance. Is that right? About along the lines? And is that the same for FHA loans?
Yeah. There's a lot of different ways to get rid of mortgage insurance or avoid it up front. There's you can add to the interest rate on a conventional loan rather than paying mortgage insurance separately. So that becomes part of your interest payment. But getting rid of it after you do have mortgage insurance is pretty difficult.
Okay. Okay, good to know. So, are there any special requirements to qualify an FHA loan? Anything that somebody would have to be aware of that's different? You know, for example, for a VA loan, obviously you have to be associated with the military. For FHA, do you have to be a first-time home buyer?
You don't
or
have to be a
anything like
first-time home buyer for an FHA loan.
Okay.
It's got to be a primary residence, so that's one qualifier.
Now, would that include, because single-family residential, or I should say just residential, is up to 4 units. So if you were to buy a duplex, triplex, or fourplex and live in one of the units, do you think that would qualify?
Yes.
Okay, great. So you could still do an investment property, you would just have to make sure that you lived in it. And is it usually for 2 years that you have to live in there, or is that just separate, that taxes?
Yeah, that's a tax.
That's a tax thing that usually people have to live 2 out of 5 years to get their taxes out of that. Okay, great. All right, so how long does it take to get an FHA loan funded? Like, for example, you know, we are seeing about a 21-day close of escrow on average right now. So that's for conventional loans. For FHA, can they expect about 21 days, or is it going to be a little longer or shorter?
Yeah, it's about the same amount of time. The whole key is, though, getting pre-approved up front. That always shortens the length of time it takes to get the escrow closed. And it also gives the buyer peace of mind knowing that they're already approved for the loan subject to the appraisal and title report and purchase contract.
Okay, great. Yeah, and again, if you're not familiar with what a pre-approval letter is, please go and check out our other videos at bayarealifestyle.com or on YouTube. And again, there Phil and I talk about what that means and the benefit of it to be competitive in today's market. So we talked about the advantages. We talked about how long it takes to fund an FHA loan. We talked a little bit about some of the disadvantages, you know, with the perception in today's market with different agents and sellers, as far as, you know, whether there's enough skin in the game at 3.5% down. Doesn't always make you competitive, and some of the costs involved with different insurance and things like that on top of it, and the monthly payments. So I'd like to talk about, you know, you said that people can usually have a lower credit score. What did you say it was? 620, right? About 620, and it could be as low as 580, but usually around 620 is what you're looking for?
Yes.
Okay, so if you did have a bad FICO credit score, how does that affect the loan? Are you still going to get a pre-approved up to 636 with different costs, or how does that work?
It mainly affects the interest rate. Generally speaking, the interest rate is determined in 20-point increments on the credit score. So if you have a 640 score, your credit score, or excuse me, your interest rate is going to be better than somebody with a 620 score.
Okay. But if it's 639, you're going to be paying what somebody with a 620 is going to be paying.
Correct. It's just in 20-point increments right on the zero.
Okay.
620, 640, 660.
That's kind of what we're looking for there.
Yeah.
Interesting.
One of the things we can do, though, is if you apply to get pre-approved, and when we get your credit score, we can run what-if scenarios with our credit reporting agencies to see how you can increase your credit score. For example, we could say, what if we paid down this credit card $2,000? What would that do? And it would project your credit score probably increasing.
That's huge. That'd be great.
So it's a great exercise to go through, not only to get your loan pre-approved, but to get a better interest rate.
One of the things that people ask me is if the economy changes, let's say their credit score changes or interest rates go up after they've been pre-approved for an FHA loan at $636,000, is there a chance that amount that they're pre-qualified or pre-approved for will go down? How does that work?
Yeah, so basically you're asking what happens if interest rates go up and the person was already pre-qualified at a certain amount. Well, what I do is when I submit the borrower's pre-approval, I increase the interest rate, usually 1/4 to 3/8% over where the current market rate is, in order to account for possible interest rate increases. And if we get approved for that higher interest rate, then if rates go up to that point, we're still good.
Okay, great. Sounds good. So tell us, where do we go for an FHA loan? Because it's government backed, do we have to go to a government office, or do we go to a normal bank, or where do we go to get one?
Generally speaking, you go to a bank or a mortgage bank or a mortgage broker. They have to have FHA approval, so not every lender does them.
Okay.
So the first question you ask somebody is, do you do FHA loans? I've worked at companies before that didn't do them because it costs some money to get approved, so not everybody does
I see.
them.
But the max is going to be,
The max
for our area,
for
is it
San
636, 150?
Basically for the Bay Area, 636, 150.
Okay. Now the good news is, if you are buying in the Bay Area, there are still a ton of options at 636 and below. Actually, you can subscribe to my newsletter monthly, and I send out a video that talks about each county's least expensive homes, and that's single-family homes, not condos, which are generally less expensive than single-family. But I let you know what is the least expensive homes for each county in the Bay Area. So subscribe to that if you'd like to know whether 636, and that's 636,000, just so you know, works for what you're looking for in the Bay Area. Phil, we have learned so much today. Thank you again for all your knowledge. Where can they reach you at, Phil?
My phone number is 650-222-0386, and my email, pcaulfield, that's PCAULFIELD, @guaranteemortgage.com.
Great. And I'm Phil Evans with BayAreaLifestyle.com of Keller Williams, and my information is below. Please don't hesitate to reach out if you have any questions whatsoever. Thanks again for watching, guys, and we'll see you next time.